So, this is something that we were very excited to have on the platform. It is our first tokenized real estate fund. Essentially, what it is, it's based out of San Diego. It's kind of a no-brainer investment. They're guaranteeing 25% a year for 2 years, and they'll take the funds that have been accumulated and they'll use them to purchase properties in the San Diego area. And then with these properties, they'll add an ADA unit. If you don't know what that is another house or another granny unit or something to that effect. And it can't really be stopped as long as they follow the guidelines, so they're not being messed up by local regulation or ordinances. And so it's kind of a no-brainer. The way I see it is they're buying properties and then they're adding something at 200 to 300 bucks a square foot and then selling it between 800 and 1200 bucks a square foot. I mean, it seems like a no-brainer to me. But I know James is ready to get started. And so, James, why don't you take it away from here?
Yeah, thanks, Mark, for the introduction. Hi, everybody. Thank you so much for spending a Tuesday morning with us over here in San Diego. As Mark said, we're building ADUs in San Diego. And I think, as he told you, it's probably like a limited time opportunity as well. The name of our particular fund here is for GTC Ventures. To give you a bit of a disclaimer here, I don't know, Mark, do you want to go over the disclaimer really quick as well?
Yeah, I mean, everyone should know that, we are registered as a security, what's called exemption. And what you have to know is that if you're in the United States and watching this, you have to be an accredited investor to invest. You can watch it all you want, but to invest, you need to be accredited, and we will check. If you're international and in the U.S., we have to say that we're going to do an AML check, which is anti-money laundering, and a bunch of other checks, so just to make sure that you are who you say you are. I've never come across a situation where we've had some nefarious actors, but there's always a first time. Also, that there's a risk to investing in securities, and we'll explain some of those risks as we go. But like anything, it's a risk, and um, you just have to carefully consider what it is that they're offering today. For in my opinion, in my humble opinion, and this is not investment advice, this is a no-brainer. But you be the judge. You're the intelligent investor, and you decide whether this is for you or not. Go ahead, James.
Absolutely. Thank you, Mark. So, a little bit about us. So we're essentially creating a investment fund here to allow people from around the world to invest into San Diego. Now, San Diego is definitely known as one of the best cities in the entire world, if not in the United States. A nice saying here is that we live where you spring break. So there's a lot of opportunity here for this particular or desire to be in this particular area. And what we are is actually an architect developer. We started off in the architecture world and eventually got into development when we realized that it is much more lucrative to be able to also design and build instead of just only doing the design part of everything as well. The important part here is obviously who is actually leading the organization. So I'm one of the actual owners of the company as well. Coming from the legal counsel side of it, I've done a bunch of investment in immigration around the entire world, worked with over 27 different countries, worked with projects like Marriott, Hyatt's, all that stuff as well. A lot of Fortune 500 companies as well. Uh, Manuel Hernandez, also my partner Manny, he basically does a lot of business stuff. He's raised a few companies up to essentially multi-million dollar companies and still continues to run them, not exiting just yet because he actually enjoys running the actual business. And Nuon is a design element of it for the architectural side. Um, just so you guys do know as well, Manny also has his own general contractor license, which will be important because that's where we actually get the development stuff coming down the road. And if you guys have any questions about us as individuals, you can always give us an email. And if you actually want to talk to one of us as well, Mark will have more information about that as we kind of talk to any interested investors. So for our in-house team, what we've done is built a specific team designed to maximize ADU development. The first part about it is we've done over 400 projects in San Diego area specifically. That includes everything from restaurants, super high-end industrial zones, all the way into the multifamily complexes, and then more recently, in the last 3 years, basically ADU units, what we found to be the most lucrative. It doesn't sound really super sexy, I guess, to say we're building granny flats, but it's actually quite interesting because it's developed into people calling it granny apartments now, as they call it, or basically giant EDUs. So there's a lot of new interesting terms
Well,
floating around.
some of these are actually bigger than the actual home that was originally on the lot, though. So not much granny, but more like family.
Exactly. We do actually move back into their EDU units and let other rent out the front house. No joke. Um, this is a little bit outdated. We've actually acquired a few more properties for our own ADU construction in the meanwhile while we've been running this fund. So just so you do know, we do invest our own funds into this. And this will be something where even if we do invest with whatever comes through here, we're actually be investing alongside our investors in our own way, shape, or form. So there's three elements here that are super important. The first one is obviously the architect, development side, property management, and then eventually the sales of it, which is how we will essentially repay the investors, either sales or refinance. So that's all done in-house. It's a competitive advantage because we're actually able to do things that not, a lot of other people are not able to do because they'll have to hire third parties to go do that. The acquisitions arm is work with GG Homes. It's a good partner of ours. We've worked with them for quite a long time. As a result, a lot of the properties we get are being purchased about 20% under market value, um, if not even lower in in some of their aspects too. And finally is SMS Law that deals with the actual legal side of it as legal counsel. Basically, we handle the legal side of all these aspects with a lot of we have a lot of experience inside the real estate area in San Diego specifically. So the quick overview of everything is we're essentially a hybrid tokenized real estate fund. For those of you who don't know, the main thing is we're tying any cryptocurrency or any traditional financing as well with the actual real estate here in the ADU construction game. So right now, that is a very limited time opportunity. One of the reasons being is that there is what we call a RHNA mandate, which is a regional housing needs assessment for San Diego. And San Diego is essentially required to build a massive number of units over the next years until 2029. So in 2029, most likely these funds will be shut down and we won't be running this anymore. We'll still probably focus on building ADUs, but we understand that this is a time limited opportunity. For investors, we aim to basically return a 50% return after 2 years, or as Mark said earlier, 25% fixed return for per year. The main thing here is even if you're investing cryptocurrency, whether that is going to be Ethereum, Bitcoin, or any other traditional cryptocurrency, or even if it's USDC, that's even great. It's going to be secured by the real property that we have actually purchased here. So this actually ties that to any crypto or virtual currency. As we kind of mentioned, this is I kind of touched on it briefly that it's important to have all this housing, but the main thing is that California is actually in a crisis. For any of you that are kind of checking onto the world news or from internationally or here in the United States, you'll know that California basically the cost of living has gone through the roof. There is not nearly enough inventory to actually provide to anybody that actually wants to move here. And San Diego, I believe, more recently just hit one of the most expensive cities in the United States, if not the most expensive city to buy property in. The opportunity here, as we kind of mentioned, is going to be basically fulfilling the housing need. Now, the interesting part here is that most people, when they decided that the San Diego housing need had to be met, they went for the easy one, which is going to be, or not the easy one. They went for what they were already doing, which is the moderate income housing to middle to high income housing, which is what people want to see, right? They want to see big properties and like really, really cool looking ones and stuff like that. What we focused on was actually the majority of what needed to be provided that everybody else is not looking at. And that's going to be the low to middle income housing. And that's what ADUs are really designed to fit. It's why if you actually go onto the San Diego government website, they literally will have all this information about how ADUs will essentially fulfill the housing that is needed for San Diego. In total, there's basically 108,000 units that need to be built by 2029. Essentially, San Diego has to triple its output of affordable housing in order to meet that. So what they did was they actually enacted a whole bunch of the ADU policies that the state had provided and then aggressively streamlined it. So that means that when we build something with the ADU construction, we actually just have a streamlined permitting process that can't be removed. They must approve it and allow us to actually work with the city to make sure that it gets approved. Moreover, there are timeframes which are fully restricted on the government side, which means they cannot exceed certain timeframes or else they'll be penalized. The other aspects of this that make it super important is that we actually have all the connections that we need for the ADU building here in San Diego. We've done this multiple times over and over, so this is essentially cookie cutter to us at this time. And this kind of goes more in depth into the actual reasons for San Diego. I like to highlight the most important things to me that always made it like this the most desirable area. One is going to be the actual transportation. Essentially, if you build within a half-mile radius of a public transport, you do not need to build any parking, which means we can essentially create multiple ADU units and not have to worry about the parking space, which means that it's a lot easier to build multiple units. On top of that, is that we're able to build instead of just one or two granny flats in the back of a construction, or sorry, the back of a lot of land, we're actually able to build between 6, 8, and even higher. The biggest project so far in San Diego was 149 or 148 ADUs built in the back of one plot of land. No permits needed for the actual like apartment building complex. It actually got a lot of heat and like pushback because it was too aggressive. What we like to focus on is building just really nice units in the best areas by purchasing essentially the cheapest property in that area. So there's so many different other aspects which make San Diego the best area to actually be for ADU construction. But I would probably say the removal of parking requirements is super important. There's actually a removal of coastal review if you have a specific areas. All areas across the entire state, and especially in California, cannot prohibit you from actually building ADUs. That means that in traditional areas that before would be like, you don't want ADUs in here, they actually cannot deny this. And then on top of that, which we never really focused on too much, was the actual incentives to do it. We actually didn't need it. We actually wanted to just go straight for building good ADU units in the best areas in San Diego. So that brings us to our actual raise. It's actually quite a small raise. We actually only wanted to raise a $5 million for this particular time. It was just to see whether the market was ready and essentially the crypto market was ready to actually have an asset-backed virtual coin. At the current time, like I said, we've already done multiple investments ourselves, but for the investors that are interested in going into this, the money that comes in will be used to acquire a real estate and a construction loan for the fund. We basically take the money that we're given and we will invest in multiple properties. We develop and basically permit the ADU properties, which that massively enhances the value of those assets. And then we can either refinance or sell those properties at a much higher rate. If you check over the years, San Diego has just aggressively continued to gone up in property values. And this is essentially capitalizing on it at a very good time as well. You can see over here as well, the ROI breakdown, capital investment, if you put in $500,000, you'd get 250K at the end of 2 years. And the reason why we're pretty confident about that timeline is the average time frame for us to get our permits is 8 months, if not earlier. And then construction basically lasts for a year. And that's kind of where we're trying to hit so that we can consistently give our investors, when they invest, their money back within a short time frame. Other key reasons, preferred returns. We are second in line. You guys as investors are the first in line to receive any distribution. So we don't get paid until you guys actually get paid out. And then alignment and co-investment. We are investing our own funds into this as well. We will personally guarantee all the construction loans with any of the third parties. So we actually are also making sure that in the investment, we're on the line, not just to fund itself. On top of that is going to be the real world asset securities we talked about before. If you are investing in cryptocurrency, we'll be going into USDC so that the money goes in directly. And then just diversification. A lot of people in the crypto world are obviously doing a lot of crypto assets. We're hoping to basically provide some element of security to those, especially in the way the current market has gone. So that money being in a physical asset will probably be very, very good. Competitive advantage. For those of you that don't know what a architect developer is, it's exactly what it sounds like. We're essentially an architect and a developer. The biggest advantage that we get that is that we design and we actually plan our finances when we design to maximize the best profits for the actual property. So in most cases, what happens is if you're just an architect, you don't really know what you're doing for construction. You're just essentially going to hire good people and you're trusting somebody else to say, I'm giving you a good deal. Um, and I sure for all of you that have built something, the last time that you trusted a general contractor and thought you were getting a good deal, I'm not sure how that turned out for you guys.
Yeah.
I I will say for us, it's always been, well, why don't you add all these other fees here? Um, Likewise, as a contractor, when you hire an architect, they're always charging a higher fee, mostly because they have to make that money as well. But a lot of the architects, they know that their skill set is needed and they have to have the licenses, etc. So what we're able to do is actually cut the cost on both ends and then build to maximize each potential lot. So when we buy, we're actually looking for that sweet spot of what is the cheapest property that we can do, and then how do we build that into the maximum number of ADU units without making it look terrible. I know that sounds like a weird aspect for it, but it's actually really important for us. We don't want to build things that look like jail cells. We like building things that are nice, that people want to live in, that are really just a good property to not just live in, but also to invest in. So we actually have streamlined that whole process at the current time. What we do is we'll find out, let's just say on average right now, we're getting about 1,000 different properties that we can check every single month. And through those properties, we filter through them and we have our own formula, which basically says, okay, great. This property might be able to build 7 units and our potential investment here is going to be $1 million. So we know that when we're done with this is going to be a 3 to 4x or maybe even 5x or higher when we're actually finished. The other really interesting part too is as we're buying, another element of how we're able to get money is right after permitting we're actually able to a lot of times sell those pieces of land for 2 or 3x of what we've already invested into it. So there's a lot of different ways that we actually can make money and at the same time provide good units of housing for the community here. Another aspect of it is how do we build it? That's going to be the really important part. Now, traditionally, when you look at an apartment complex, you're like, oh my gosh, it's going to take 3 to 5 years to build this. The average size for us is between 5 to 10 ADU units are built on a single piece of property. That's where we find our sweet spot in. With that, we're able to actually move our templated and stackable plans. So we can actually build, 80 units, either like a side by side or even on top of each other. We've had a proven track record for any of our loans. So we're able to get a loan very relatively easily at the current time. And that's actually what we do for all our properties. There's no need for complicated stuff like parking or elevators, as we mentioned. Everything we do is designed to make it as simple as possible for when we apply and we get those permits, they're moving through quickly and efficiently. This reduces the permitting times. It also reduces the build time. So our build times are generally around 1 year. It'll fluctuate depending on the size. A 10-unit lot might be, a little bit over a year, and a 4 or 5 unit slot size might be around like the 8 or 9 months build. When we look at the actual investment, this is just general ideas of what we've done in the past. A lot of it is just going to be when the initial property, we take a look at it, and then we build essentially 5 units on that specific property. With that, our income, the actual valuation of that property has gone up, but also we can actually subsidize whatever the loans are at the time with the rental income. So usually people ask here too is, well, does rental income take a place in what I get for your returns? The answer to that is not directly, no. The way that we pay out is 50% at the end of 2 years on whatever you invested with us. What that rental income does do is allow us to pay back those loans so that it doesn't impact our investors. And it also allows us to get a little bit maybe extra revenue just in case we need to pay the investors a little bit faster. So Over here, just some of the actual projects we've done. The actual valuations, final valuations here are actually higher at the current time. You'll probably notice that right now these are currently looking like models, but this is actually fully completed. We're getting the pictures for the full ones right now, but this one actually turned into 5 units. We might actually still be able to build another unit on top of this one as well. Um, in addition to that one, we have this particular project over here. This one was a house over in Bonita. This one is built up. It has a whole new complex in the back over here. We only did 2 units with this one, but it was made to see this looks really nice. So this particular one was really designed to make it look just really nice for the actual house, and was done by a private investor as well. And then finally was this Soledad Mountain project as well. This one is turned into a 4 unit. So you can kind of see that our area is really around this like small to mid-size ADU units. It's really designed to actually get a nice project, not just like any project. Um, Over here, we just have a list of different other projects that we've completed down the line. These are some of them right now. Our biggest one so far was an additional 11 units built on a single project. So that was quite interesting. But you know, the final valuation basically doubled on that one. And this is where we actually have a lot of room. So more of this, as well as the San Diego market keeps raising, these actual valuations will continue to increase over time. And that's really where the growth aspect comes in for this. Most people are, when they look at the ADU property, they look at it as an investment property and they just say, great, I want to invest, not really, or I need to build something for the back. In fact, you know, the old version of ADUs was a granny flat. You got it for your grandmother in the back. Now, they're essentially investments. These are popping up all over San Diego, and the people that are renting it are not just, you know, a random person that needed a easy place to stay. They're usually someone with significant income that can't find affordable housing anywhere else. That includes like biotech. That includes, you know, tech. We have Qualcomm over here. We also have Microsoft, Apple campuses come up. This is essentially one of the most desirable areas to work and to live. And that's how we envision that growth will continue here in San Diego. And for the investors, relatively straightforward. It is just refinancing or sell. If we look at it and we see that refinancing is a great time, then we keep the properties and we can actually pay back the investors. That incentivizes us to always make sure that we're getting the best deal for our investors. Likewise, if we're just selling, we'll just sell that property and then we return the 50% to the investors before we get paid. So it also incentivizes us to sell at the highest amount so that we can actually get money at the end of it. End of the day is that the investors are getting the biggest chunk of capital. The last part will be here. A lot of it is about how do we mitigate the risk for our investors. We will have a completion guarantee, which means that even if the investment amount isn't sufficient to finish all the projects that we invested in with the GTC Ventures Fund, we'll personally put in the money ourselves and actually complete that project. And that's just something for us, is because we believe in this entire project and we're already doing it ourselves, so it's not really a big ask. On top of that will be the qualified ADU properties. We are very, very specific on what we do. So basically, unless we know that this property will hit our minimums, we don't actually buy and then go into that property for construction as well. Finally, it's just going to be, of course, we have to repay any bank loans first, but you guys are the next position right after the bank. Um, and that's pretty much it. It's a really interesting time, and it is time limited. In 2029, this will be done, which means really in 2028, people won't be doing this anymore. But that's where we're currently at. And if you guys have any questions, Mark, I'll let
We
you
do
take it.
have a number of questions, some of which I'll probably have to answer. So let's start with the first one. What happens if a tokenized real estate platform shuts down? So obviously, I'll answer this. So here's what happens. So let's just say it gets shut down. We don't anticipate that, of course, but let's just say it does. All of your tokens are still live on usually the Ethereum blockchain. It could be Polygon, it could be Solana. There's a number of different ones depending on what the real estate fund or developer chooses. In this case, it's Ethereum. So everything's still live. You do not need a platform once you've purchased it. The platform is very good about highlighting it and tokenizing it and all that. But once the tokens are minted, they're minted. They're on the blockchain. You can't take them back. They do represent real legal value. So that relationship is after the platform, after you buy it off the platform, is between you and the developer, or in this case, the real estate fund manager. And you don't need us anymore. We'd like to be involved, but if if the platform is gone, it's gone. But it doesn't stop your ownership. Nothing really happens. So to answer that question, the next question: how do platforms verify the authenticity of tokenized assets? Again, I'll take this one. So we're the ones who mint them. So there's a direct link and direct list of tokens that we've minted, and it's very easy for us to see which are real and which are not, because they're constantly tracked, whether it's in the secondary market or the primary market, constantly tracked by our platform. We know our tokens are easily identified on the Ethereum blockchain. You cannot create something that's a duplicate of it. That's literally impossible. So we will be the ones that always can verify the authenticity of these tokenized assets and whether they relate directly to an ownership interest in the GTC tokenized fund. So no worry about that. What are the technical, next question, what are the technical requirements for investing in tokenized real estate? You just need to be able to pass an AML KYC check. And if you're in the United States, you need to be an accredited investor. And if you go to our platform and start the process, you will be put through that directly. So technically, you just need an internet connection and to be able to pass any kind of AML KYC check. Wow, I feel like these are all for me. How do tokenized real estate platforms ensure transparency? Well, I mean, everything that's done with tokenization. Now, remember, this is a hybrid fund. You can invest directly without buying tokens. You could just invest directly with James, and we'll give you the contact information here in just a second. But you can invest directly with fiat or cash or wire, or you can invest in a smaller amount using just purchasing tokens. So that the platform, as long as it's if it's the tokenized part of it, it's all on the blockchain, easily auditable by anyone, anywhere in the world. And then, okay, so gosh, we got an intelligent audience here. What is the role of decentralized finance in tokenized real estate? Well, we're not quite there yet. But the role of decentralized finance in tokenized real estate is, let's say you buy $50,000 worth of tokens. And, you don't want to wait for the 2 years that James talked about before you get your return. You want to either borrow against it or you want to sell it. Now, you could sell it today. You can even borrow against it today. So you can take money out of that collateral in the event of an emergency, or maybe you just want to invest it in something else. So that's the role of DeFi. Now, DeFi isn't too, let's just say, mature yet. It's not as easy as I've just laid out. It's probably got another year after we see regulation here in the U.S. Finally, these things will spring up. They already exist for crypto. They just don't exist entirely for the tokenized security side yet, but they will. As soon as the regulation's clear, I think you'll see a number of announcements. So that's the role of decentralized finance. Okay, now here's a question for James. How much are the principals investing? Let's start with that. How much are the principals investing?
So our initial investment amount is going to be about 250K out of the 5 million. That's going to be separate as we have to build up a few of the aspects for it. That's going to be including essentially starting up the actual company. We also are essentially doing all the work at cost, which basically means that we don't make any money other than paying employees to just get the actual architect development done, buying all the actual construction stuff, etc. So to give you an idea, The investment comes from us personally. It also comes from the use of our own companies to actually work and ensure these projects move forward while maintaining the actual business operations. To give you an idea, we're usually building at between, I would say, on the low end, 150, and on the high end, like 300, maybe 400 if we really, really want, per square foot. A lot of people are actually building at significantly higher with much less quality of the final construction of it. That being the case, we actually terminated every one of our contracts with any of the developers we were working with. So the only thing that we work on right now is going to be this particular project, which is building ADUs in San Diego.
Okay.
In addition to that, will be anything that is not invested at the end, which means let's just say we only raise 3 million out of 5. We'll just invest the rest of it ourselves. So that's going to be the second part of what we will contribute, and that's why there's construction completion guarantee.
Okay. There's a couple more follow-ups to that. Why are the investors only getting a small percentage of the profits? You mentioned 4 to 5x versus 1.5x for investors.
One of the reasons why is because we're taking on the risk. So while the investors are coming in and they're actually putting in a significant chunk of the money, we're actually taking the risk because all the construction loans are tied to our individual names. We're doing all the construction. We're basically doing everything on our side as well. So when we look at it, we wanted to make it super simple and easy. And especially because in the crypto world, we wanted to give a solid amount back versus just something that is going to be in flex. Well, we will be doing the actual construction. And just keep in mind that on average, if you were to invest in a normal fund, most people are not going to give you more than 10 to 15% as a fixed return per year. In fact, we check the entire market, and a lot of people are giving like 20% for a 2 year market. We're only doing this right now at 50 because we want to make a really hard hit really fast and make sure that people get that money back so that we can establish this particular investment opportunity as one that is going to be super strong and solid, that is outside of just us knowing that it's super strong and solid.
Okay. And the third part of that question, what happens if the investors don't get paid at the end of year two? Does it continue to accrue at 25% a year?
We have a bit of a buffer for us just in case. So we always put like essentially a buffer. That's going to be a 6 month buffer, which basically means at the end of 2 years, if we cannot pay it back, we'll make sure we pay it back within the next 6 months after that. That may involve, in let's just say in the worst case scenario, we have to liquidate some of our own assets to make sure that payment goes out. But at the end of the day, is we're confident in being able to give that 50% at the end of 2 years, and that's actually it's funny because the first times we actually did this, people were asking us like, "Why are you giving us so high of an investment?" Uh, and we were like, "Well, we should have apparently made this lower for people." But to us, this is a reasonable amount of the actual pot that will eventually come down the road. At the end of the day, it might be the case where we have to sell off the majority of the properties to make sure all the investors are paid, and maybe we may only get to keep like one or something like that, or maybe none at all. But the goal of it at the end of the day is to build our investors and make sure that they get a very nice chunk. They're first and foremost, and that's why you guys are placed getting uh, the actual 50% up front. After anything that's left, it's what we get. In the future, we may open it up to situations where we'll allow investors to come in with us after we identify how much we'll actually be able to give to the investors and how much we actually get at the end of the day. Because it might just be you guys get more than us. We're relatively certain it'll be about even, to be honest, but we do want to be able to give the investors something more solid to stand on first.
Okay. Next question. We have a lot. How is the tokenized real estate market expected to grow? Let me take that one. Um, as we've seen, it already is growing. When you get finally get some regulation, I think it's going to grow exponentially just because of the liquidity now in real estate. I don't know why you would want to do it traditionally when you can tokenize it. I think the other aspect of that is, are we making it easy to onboard people? Banks have traditionally slowed things up by not allowing, large transfers into crypto, even though this isn't crypto. That's the perception that's out there. Now that banks are being opened up, There'll be less friction, and we'll be able to onboard people a lot quicker. So I'd say exponentially after regulation is put out, at least by the United States. Next question is, how does tokenized real estate appeal to institutional investors? I'll take this one as well. Not, it doesn't appeal quite yet. Now you're looking at what they're investing in. These institutions are investing in bonds, they're investing in other commodities, but not quite real estate. And that's due to the regulations. I mean, think about these institutions. They don't want to be penalized for doing something that's not crystal clear out there, and then they lose their license to do other things. So they're kind of hesitant. The big ones aren't really investing big. Maybe there's a one-off just to see how it works, and they're very careful about how they do that. So again, until regulations in place, we won't see a lot of institutional interest in real estate. It, but they are investing in bonds and things that are a lot clearer right now. So we know they're coming. We know it's on their list for sure. Next question: what are the emerging technologies impacting tokenized real estate? I think the technologies are all there. I think it's more of an onboarding problem, getting people to get their wallets to move, fiat or you know whatever local currency they have into more of a tokenized format, buying tokens related to real estate, for example. And that's impacted by regulation. So I'd say those are the two big things: is making it easy for people to invest, as well as the regulation that enables it to happen in a clear and efficient manner. Okay. Uh, question: what is tokenized real estate and how does it work? Well, I'm glad you asked this, David. So, tokenized real estate is simply a digital representation of a share within, in this case, a real estate fund or an actual project. Now, you can do that, and the only way really to do it efficiently is through an SPV. And why do you want to use an SPV? Because imagine if you're dealing in the United States. Let's just take the United States. There's other places where it's far easier. The UAE comes to mind. But if you're buying real estate uh, through tokenization, that means you could have hundred of investors in this fund or in a project. So you got to put them all on title. But who wants to do that? You go down to the title office, record, and then when you trade that token in the secondary market, that's got to be done as well. That's a nightmare. So nobody wants to do that. So instead, you do what's called an SPV, a special purpose vehicle, and you're just trading shares within that SPV. And this SPV actually owns the real estate, or in this case, the fund, and you're just trading shares within the SPV, which is far easier to do, and our platform tracks that live. Okay, good question though. How have institutional investors used tokenized real estate? They really haven't yet, but they're going to, as I alluded to earlier. Um, how can tokenized real estate unlock 50% returns for investors? I think James just answered that, so we'll move on from that. Not going to answer that one. Okay, what are the case studies of tokenized commercial real estate? Good question. So the big one that everyone always points to because it's already been completed and they already have their second token that's out there is the St. Regis in Aspen, Colorado. They took a portion of their hotel that they wanted to improve and build upon and issued an $18 million tokenized real estate token. This was about 4 or 5 years ago. That token ultimately paid off 60%. And now they've issued another one, and they're doing some other things to that hotel. So that's another token, not on our platform, but something that you might want to check out because it comes with benefits. If you're a token holder, you get upgrades or free rooms or whatever. I'm not exactly sure what the newest one's doing, but so that was one of the most successful commercial real estate case studies that are out there. Remember, a lot of these things are just starting out, so there's not a end-to-end case study yet, except for that example. There's others, but that one's the most famous one that comes to mind. Okay, okay. I might have to answer this one. What are the risks of mismanagement in tokenized real estate projects? I mean, it's the same thing, and he's talking about processes and operations. I think it's the same thing as a traditional. I don't see how it's any different. In fact, I think tokenized real estate makes it easy to see what's going on with the money. If you're investing in tokenized real estate, everything's on the blockchain, so you see it. You know what's happening, and you could trace it. So there's accountability. In terms of processes and operations, it's exactly the same as a traditional type of investment. You have to trust the operator. You have to trust their processes. And in the case of James and GTC, they've done it a number of times. For them, it's just plug and play from what I've been able to see. So I think they got the processes, the operations, and the case studies to prove what they're able to do. It doesn't matter that it's tokenized or not. It's exactly the same thing. Um, how has tokenized real estate been used in residential properties? I mean, there's other platforms that invest in residential. There's a couple in the UAE as well. I'm not a big fan of that, which is why we don't do it, because the the amount of money spent on legal alone in order to make this happen, in order to tokenize a $200,000 piece of property. I recognize in California you're not getting homes for $200,000, but it's still anything under a couple million doesn't seem to be worth it to me. And then what do you do with that residential property? Does somebody live in it? Are you renting it out as like an Airbnb situation? I could see a conglomerate of or a bunch of a portfolio of residential properties. That makes more sense to me. But it's being done now, and it's being done primarily in the UAE, from what I could see. Some of it's done in the U.S. as well. Okay, how does market volatility affect tokenized real estate returns? James, you might want to jump in here, but in terms of the tokenized real estate returns, it, I mean, the returns, James is going to promise you a certain return. Now, on the token side, when you look at secondary market trading, that token might go up and down in value. It's not going to go up and down in value like crypto because it's actually tied to something real. So I don't see a lot of volatility in the token itself. But as far as the real estate returns, James, you want to talk about what could happen and what's likely to happen in San Diego? I mean, no one has a crystal ball.
Absolutely. And I think that's a really important note, which is that's also why we don't base this on the amount we're giving back or for the investors is a 50% fixed return after 2 years, which basically means that regardless of market conditions, your crypto token is actually worth whatever it is plus 50% at the end of 2 years. And I think it's a really key point to have here. It's a physical asset. It's not like crypto, which is, as we've seen in the last 3 months, has gone, kaput for and many other and many of the actual aspects, Bitcoin being one of the only ones it's kind of stayed up there at the top, but a lot has happened. Now, when we think about market volatility in San Diego, number one, I think that the market volatility, while there, it's actually in our favor. The price of everything has continued to go up. And that's actually can be seen through every single one of the United States, I guess, crashes. Regardless of what happens, the San Diego real estate value just continues to either stay at the same or continues to continue to rise. Couple that with the fact that the market volatility, if we're talking about the rental incomes, those may fluctuate a little bit, but at the end of the day, is people are still continuing to move here, and it's getting to a point of like saturation, in my opinion, as well. We're actually having too many people move here in San Diego, and we actually want not as many people. But that's me just personally because I guess I like to gatekeep nice areas. When it comes to a nice restaurant, like I'm the type of person that doesn't want everybody to go there, otherwise, quality will go down. Um, at the end of the day, is when it comes to market volatility, we look at it from several factors. One is going to be price fluctuation as far as the valuation of property in San Diego. In our opinion, that's not going to go down in the near future. And even if it does, it's not going to go down by much. On top of that is going to be when it comes to the market conditions, what we're doing is we're adding value to each one of these units. So we're going from like 1 unit properties into 6 or 7 or 10, generally is what we're looking at. So regardless of what happens, the valuation of those properties will go up. It just may not go up as much. So when we actually did our review and sort of our analysis of it, even if market conditions did drop, we would still be able to provide the sort of 50% return because construction value itself would be able to warrant that. It just means that on our side, as the second people after the investors, we would not get see as much of a return. So the risk really, when we look at market volatility, impacts us as the people who are actually building it, and the ones that we're banking on the fact that the market rates are not going down or the interest rates are not going too high. That's actually going to impact us the most. For the investors, it's really not going to impact you at all unless we see a complete and utter crash of the San Diego market, which means nobody want to be here. All property values like tanked down to crazy, crazy amounts. And you can even see it in the worst economies like New York City, when COVID hit, like people are moving out of the city. You can still do investments there and have that market volatility down to like 25% less, and you're still making money. And that's sort of where we actually designed this so that the investors would have the highest security while we can still walk out with something.
Yeah. Great answer. Okay, you're just coming in fast and furious. I'm going to answer a few more, and the rest I'll just type out. How do regulatory risks affect tokenized real estate? It really does affect it, but as we've seen with this current administration, what they're signaling is they want to be very friendly here and just to provide clear guidance. I don't see this going sideways at all. In fact, I see just the opposite. Currently, we're using a variety of exemptions and then filings, and we're very comfortable with the way we've set this up. And it's been done this way for decades, but it's onerous on our part and expensive to get this set up. So we're hoping regulatory de-risks the situation for all of us. So that's what our view of regulation is. What are the liquidity risks of tokenized real estate investments? Well, right now, that's one of our top factors. Is there are companies that are trying to solve this. It will get solved. There's not a lot of liquidity, to be honest with you, in the secondary market for tokenized real estate investments. It's still a lot higher than what you currently have traditionally. Trying to sell your shares, it's going to cost you an arm and a leg and probably 25% to a broker, where there are DeFi exchanges that are set up to take some of this. There is a secondary market for tokenized real estate. It's not a lot of liquidity yet, but it'll get there once the regulation takes place. So yes, there is liquidity risk in tokenized real estate investments, but as I said, James is going to pay, these guys are going to pay you off anyway. So even if you're not able to sell your token, you're still going to get a return on it. And then what are the cybersecurity risks in tokenized real estate? That's a great question. And the beauty of tokenized real estate is even if somebody were to hack your wallet and take your tokens, you'd simply call up GTC or send an email saying, hey, look, my tokens were stolen out of my wallet. Can you cancel and reissue them? The answer is absolutely. It's not crypto. If you lose your crypto, it's gone. It's very hard to get back. You usually won't get it back. But with tokenized real estate, since it's tied to a real world asset, in this case, real estate, you would just simply cancel out those tokens and James would reissue you new ones that now legally represent your shares. And so it's almost impossible to hack and steal some of these tokens because James isn't going to let it be sold in the secondary market the second that he's notified. He'll cancel those tokens out and he'll reissue ones for your shares immediately, and it's all done on the platform. Okay, we're out of time here. I will answer. Just look for the answer will be emailed to you. The rest of these questions, because you guys sent in a crazy amount, mostly related to tokenized real estate, so I can answer these on my own. But James, I do want to thank you for being for presenting this opportunity. I think personally it's one of the best opportunities I've seen all year. So reach out to James or Manuel on. You could see their emails here. Set up an appointment with them. I know they'd love to talk to you. If it's less than I think $25,000, you're better off just going to the platform and investing. But if it's more, I'm sure they'd love to hear from you. James, any final words?
I think you covered everything, and thank you, Mark. And if you guys do have any questions, like Mark said, uh, generally we're trying to limit the amount of questions that come our way. If you're looking to invest less than 25,000, by all means, just reach out to us on the platform. If you are intending to invest a bit more, we'd love to have a chat with you to see like what your actual appetite for risk is and how we can actually explain things a bit more. So yeah, we'd love to hear, and we're here to stay. So thank you, Mark.
Thank you. Thank you. Thanks, everyone. There'll be a recording of this that we'll send out.